Welcome to weekly view on markets. All indices have closed in the green for this week after 3 weeks of losing streak. But markets are not out of the woods yet. Correction and consolidation is likely to continue for few more weeks. Q2 results of the companies are weak. Market is worried about the results of the companies as market is trading at high valuations. FIIs continue to sell and it is matched by DII buying. There seems to be enough liquidity in the system to support the market at lower levels and prevent a big correction. We have seen that buying coming in at lower levels in the last week and market has picked up in this week. Investors have to be patient and wait till corporate earnings pick up, which may take one more quarter. Interest rate cut by RBI would be a trigger for the markets to start the next phase of bull run. Let us look at performance of indices in this week. Nifty has closed at 24,304 with a gain of 123 points. That is a gain of 0.51%. Bank Nifty closed at 51,673 with a gain of 886 points. That is 1.75%. Midcap Index closed at 56,496. It has gained 1,218 points. That's a gain of 2.20%. The major gain during this week was in small cap index, which has gained 947 points, and that is a gain of 5.31%. It has closed at 18,794. India VIX has spiked up further. That means volatility in the market has gone up. India VIX is at 15.90 and it has gained 8.68% during this week. Let us look at sectoral performances. Almost all the sectors except information technology and consumer durables gained during this week. Only two sectors were in the red. There was all around buying. PSU banks gained the most at 7.87%. Media stocks gained about 7.02%. Metals realty gained more than 3%. Public sector companies, commodities, infrastructure all gained around 2%. Energy, healthcare, pharma companies gained between 1 to 2%. Manufacturing, NBFCs, FMCG, oil and gas all gained 0.5 to 1%. So there was all around buying at lower levels in the market. The markets may not go to the higher levels, but a sharp correction from here also is ruled out because market is supported by liquidity in the domestic institutional investors and buying is coming in at lower levels. This is the daily chart of Nifty. I have drawn this bearish pattern last week and Nifty after falling from the highs is now showing a sign of consolidation during this week and this consolidation can continue for a few more weeks. This is the chart of Nifty mid cap index. The mid cap index has started climbing back from the lows. We have seen buying in the mid cap index, and if this continues in the coming week, and if Nifty mid cap index gives higher closing in the next week also, then I can confirm that the trend has reversed and mid cap index can go to higher levels. So till that time, I hold that Nifty mid cap index also can consolidate or we may see further selling in the Nifty mid cap index. This is a chart of Nifty small cap index. This is one index which has 1 year high. That means 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 1 really given a sharp recovery from the lows. And this recovery shows that quite strong buying support at lower levels. Despite the bearish pattern, it looks like Nifty small cap index is going to go to higher levels in the coming week, and investors can look at buying good quality small cap stocks. This is a chart of Bank Nifty index. We can see Bank Nifty index after falling from the high of around 55,000 levels. It is consolidating between 51,000 and 52,000 on the higher side. So 51,000 is the support at the lower side, and 52,000 seems to be the resistance level. And Bank Nifty may trade in this range for coming week also. Now let us look at some of the fundamental factors of the India's macroeconomic fundamentals continue to remain strong. RBI forex reserves for the week is at 684.80 billion US dollars. It is down by 3.43 billions, but still 684.80 billions is a quite good forex reserves for RBI, and it shows a comfortable position for the Indian economy. Foreign exchange rate is at 84.08 rupees per dollar, and dollar index has slightly gone up. It is at 104.31. Brent crude price is at 73.03 per barrel. It had gone up to $78 per barrel. From there, it has again come down to 73.03 per barrel. Despite the recent escalation in between Israel and Iran, the crude price has fallen, and lower crude price is definitely good for Indian economy and for the oil marketing company. Gold price is at around 78,778 for 10 grams 24 carat. Because of the festive season, the gold has seen demand in India, but still the overall gold prices have not gone much higher. FIIs have sold 17,542 crore during this week. They continue to sell for past several weeks, and whatever FII is selling, that is matched by domestic institutional investors buying. They have bought 13,945 crores during this week. The Nifty 50 chart looks weak, as we have seen. The chart is in for a consolidation or small correction further. It is consolidating in the range of 24 to 24,500 range. Mid cap index has pulled back, but yet not showing a bullish sign, as I have explained on the chart. Small cap index shows strength and good time to buy quality stocks in the small cap. Q2 results so far are weak. The revenue is up overall around 11.4%, and profit is up by merely 4%. This is quite below the expectation, which cannot sustain stock prices at high valuation as earnings are weak. Markets may continue to consolidate or undergo a small correction further till the earnings pick up. Investors have to wait for the corporate earnings to pick up, then only we can expect the market to go to the higher levels. It is good time for SIP investors to accumulate units at lower NAVs due to the correction. The mutual fund investors are advised to continue their SIPs, and the stock investors have to be patient, and they can look at picking up good quality stocks in the mid cap and small cap sectors. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.